Hey, Bulls and Bears, I hope everyone is doing well. Back here with another dose of economic reality. And as the title says, something horrific just happened, or you would think that something horrific just happened by reading the headlines. Let's go right here to this report here. The U.S. national debt hits 34 trillion as Congress gears up for a funding fight. So they're fighting to get more financing to buy more things or to pay for more projects that we can't afford, that we don't have the money for. So we have to borrow it. And when you look at this, I mean, 34 trillion, is it more scary or frightening than 33 trillion? And was 33 trillion more frightening than 32 trillion? It gets to a point where it really doesn't matter. I mean, once you get past $1 trillion, it can never be paid off. Even the first dollar can never be paid off because you have to borrow more money to pay it off as a country, because if you have to borrow money, then the only way you get money is to borrow it, and then by the time interest gets added, you can't borrow enough to pay it off because there's more interest. Anyways, most of you know this, but it's just pretty interesting how these stories get put out there about the debt. Uh, Basically, we should have filed bankruptcy as a nation a long time ago. And then some people say, no, JJ, we're going to pay it off. All they have to do is raise taxes, and this tax money is going to go pay off the 34 trillion. You really think that's possible? There's people really out there that they're messaging me when I talk about the debt. They message me saying I'm wrong, that we can actually pay this off. Folks, people in the United States can't even pay their student loan payments. About 40 million people, a big portion of them are behind, close to 50%. And you think somehow we're going to pay off $34 trillion? People in the United States, consumers have $17 trillion in debt of their own collectively. And you think those same people, combined with the people that can't make their student loan payments, are going to pay off the 34 trillion? So no, the U.S. is insolvent. We're bankrupt. But as long as we can keep borrowing money to no end, then we'll never really see any negative consequences, right? Or have we already seen the negative consequences, because we see the cost of living now is exploding and really not coming down, even though certain people out there want you to think that the cost of living is coming down. So what do we have to do? We have to stay on top of the news. We have to invest. We have to try to make money. December was a little bit of an interesting month for me. 2023 was a pretty good year with investing and income versus expenses. I was able to put away more money each month, except for December. December, we had to pull from our savings a little bit. So I think we might have went a little bit high on our shopping budget for December with the holidays. And we did travel, not too far. I mean, did some things, extra activities that we normally wouldn't do because of family and relatives. But yeah, wasn't bad. We'll pay it off in full. Everything that we spent, everything that we put on credit cards, we'll pay it off in full. But usually, even after paying off the credit cards, we're still saving more versus how much we're spending and paying off on utilities, everything else, all these expenses. So last month, December, was a negative month for us. We had to pull from savings, in other words. If you're in the portion of the population that's saving more money each month while paying off everything else in full, maybe not a mortgage, but maybe not a car, but if you're paying off your credit cards in full each month and still managing to save more money each month versus draining your savings, then you're in a very small percentage of the population. I'd say about 5%. Well, no, the top 10% is 10%. I'd say 15%, if I had to put a guess on it. And I don't think there's any statistics out there about that. If you've seen them, please let me know down in the comments, and I'll put the article up. But I haven't seen that particular piece of data. So you've got the top 10%. Obviously, they're doing well. Once you get below that, I think it's only about an additional 5% of people are able to pay off their credit cards in full each month and continue to save up more money. And again, most of the population is, one, living paycheck to paycheck, and two, going further into debt each month and having to pull from their savings. We've talked about the articles where people have to pull from their 401k accounts as an emergency. And so how much more of this can consumers take? That is the question. And once the big economic downturn hits, that's when we can really make money. Because if you do have money saved, then that's the best time to buy, when stocks crash, when other assets crash. So I'm continuing to hopefully hold some cash. If I could continue on this path, hold cash and wait for a correction. If we don't see a correction, then you are going to be very glad that you had investments. So you want to hold on to something. You want to hold on to some sort of investments that you think will go up if we don't see a correction, if we don't see the cost of living come down or any sort of market collapse, right? And there's people out there thinking that I am predicting a market collapse someday. As soon as the news that comes out is bad enough to scare investors, and as soon as that news and the negativity of that news outweighs the confidence that money printing is always going to make the markets go higher, that's when you'll see the pullback. That's when you'll see the correction. Now, what that news will be, it's anybody's guess, but it doesn't matter. It doesn't matter if it's space aliens or a power outage or a war or a global health crisis, pandemic. Doesn't matter. From an investing standpoint, that doesn't matter. Whatever brings the markets down, it doesn't matter. What does matter is that you have uh, prepared and that you're ready for the downturn. That way you can take advantage of it. Here's an example. In 2010, the housing market was very cheap to buy a home. And, that's when I was able to get into real estate in a single family home. Um, so if that downturn would have never happened, who knows? I might not have, ever made any good investments, during that time. So you have to be ready, is my point. Well, let's get into some other news here because there's a few things I wanted to go over today. Oh, first let's talk about this. We're talking about $1 trillion in debt, right? We've heard the number trillion so much. It almost you almost can't even register what it is. But here's a statistic here. If you stacked $1 trillion in $1 bills on top of each other, it would go 67,866 miles. And that would reach more than 1/4 of the way to the moon. Just $1 trillion. So every $4 trillion stacked $1 bills on top of each other, you're going to the moon every 4 trillion. So we're at 34 trillion. How many trips to the moon and back is that? That's a lot. In other words, this is so much money. There can never be enough paper bills to ever pay this off. We can never print that much money to the moon and back. Was it 8, 9, 10 times? I mean, it doesn't really matter. If somebody knows the math on it, maybe put it down there in comments. But it's several trips to the moon and back. Bottom line, it can never be. This can never be done. We're insolvent. We're bankrupt. Now, what will the consequences be? Well, maybe it'll just be a cost of living that never comes down. But it's interesting because this number is just almost unimaginable, and there's not enough bills in existence to ever pay this off. In other words, here it is right here. I had to search for a minute to find this image. To the moon and back. We're never going to pay this off, folks. So how does it end? You let me know down below. We're insolvent. We're bankrupt as a country. We just keep printing and borrowing, and we have to borrow more to pay just the interest on the debt. So then we print more and we borrow more. There has to be an ending. I mean, this is why fiat currencies typically only last about 50 years. Now we're 52 years now, going on 53 years since the 1971 coming off of the gold standard. That's why you need to stack real money, hard assets, what I call sound money. And to me, that's gold and silver. Let's move on here because the pushback against electric vehicles is starting to show up here. EV maker Rivian misses quarterly deliveries expectations. Shares tanked down over 8%, almost 9%. And, we told you that this was going to continue to happen. There was this big rush out there when gas prices were really high. A lot of people wanted electric vehicles, and you had the shortages and had all the other things that came along with it. And now, it's not looking so good for electric car companies, but now it might be a good time to buy if you were waiting to buy an electric car because the prices came down an average of 30%. So that's pretty interesting. Interesting here as far as holiday spending. I'm not alone in my spending. Only half of Americans believe they can pay off their December credit card bill. So actually, compared to half of America, I'm doing pretty good. I can pay it off. I just had to pull from savings to do it this month. Every other month of 2023, we were able to pay it off in full and still increase our savings. But December was one of those months. So over half can't pay off their credit cards. That's pretty scary. Only half of American credit card customers believe they can pay off their December balance in full. And when the interest rate's 20%, that going to be good? 20% interest, is that bad? And that's pretty high, right? According to the industry index, signaling a low ebb in credit card confidence as the nation emerges from the holidays. The Lending Tree Credit Card Confidence Index monthly survey published dipped to 51% in December, an all-time low. Is anybody shocked? Is anybody surprised? We always say here it's going to get worse. There's an all-time low for this consumer confidence here on this credit card index. In a nationally representative survey, over 1,500 credit card holders, only 51% voiced the confidence they could pay off their credit card balance this month. In November, the index stood at 58%, so it's dropping, and it's dropping, and it's dropping. So maybe tax returns here in a few months will give people some relief. Then after that, it's going to be more downside, more downside, more downside. So how do we prepare? Well, let's get ready for an economic downturn, have cash, but also have investments, because if they try to pump so much money into this economy to try to keep the correction from happening, look out, folks. You're going to see skyrocketing markets, skyrocketing stock market. Who knows what other investments are going to go up? Gold, silver, maybe cryptos will start jumping back up. And if they cut rates on top of that, I mean, look out. It could be to the moon. Just like we talked about earlier, stacking dollar bills to the moon. It could be to the moon for certain assets. The problem is when you see assets take off like that, usually the cost of living is going up at the same time, and that makes it much more difficult on average. Let's talk about this here. David Rosenberg's out there saying recession deniers are making the same mistake as during the dot-com bubble. This guy's a billionaire, by the way. He says people are making the same mistake. Well, what if they just print money and hyperinflate instead of allowing a correction or a crash? Recession deniers are repeating the mistakes from the dot-com and housing bubbles. He's one of these people that thinks that just because prices are higher than they were before the last crash, that there's going to be a crash. Now, I agree that there's going to be a crash at some point. There's going to be some big, shocking thing that happens, shocking news that's going to bring down the markets and this entire economy. What's going to be? I mean, it doesn't matter. The bottom line is it's going to happen at some point. Doesn't mean that it won't get pumped back up again. Of course not. They'll probably cut rates, rock bottom again, pump more money into the system, more money into the banks. We'll have all kinds of forgiveness programs because so many people will be losing their jobs, getting foreclosed, losing their cars. That's the new normal. I think 2020 was just a warm up. I think that type of economic intervention will be the new normal. So what does that mean? It means prepare for more upside on the cost of living, upside on inflation, and therefore, have some good investments that are going to go up with this, but also prepare for the inevitable correction when it comes. And then after that, they'll pump it back up. It's rinse and repeat. Bull, boom, bear, bust. It's a bull, bust cycle or a boom, bust cycle. Bull and the bear. The question is, are you prepared for both? Right? This channel is not called bear bust. It's called bull, boom, bear, bust because both things happen. People think I'm a bear. I would have just called the channel bear bust if I'm always doomish and gloomish and think things are going to crash. Of course, just look at history. Things don't always crash. And when they do, they get pumped right back up with money printing, and it'll be $35 trillion in a few months, and it'll be 40 trillion, it'll be 50 trillion. And people, I guess, would still be pretending that we can pay it off, even though mathematically it's impossible. All right. So anyways, hope everyone's doing well. Just wanted to give you some economic reality. Nothing to be sad about, nothing to be scared about. It's just reality. It's just what's happening, just the way it is. But I hope you're doing well. I happen to be doing very well. 2 days into 2024. I hope everyone's having a good year and hope you have a good year ahead of you. New Year's resolutions. Mine is to straighten out my garage and to finish some unfinished projects. I'm the type of person that starts a lot of different projects And instead of finishing them, I'll get halfway done, get bored, get halfway done with another one, get bored. So I want to finish more projects that I have, side projects, side hustles, things like that. Let me know what your resolution is down below. And what do you think about this 34 trillion? Can never be paid off, right? To the moon and back, to the moon and back, to the moon and back, over and over. Thanks everybody for watching. Bye now. Peace.